Right, I think I'm seeing everything stabilized now, so I will get us started. So yeah, pretty good afternoon, everyone. Thanks so much for joining this Big Society Capital and Cardano's first joint request for proposal briefing webinar. So I'm Katie Fulford-Smith, and I'll be steering us through the next hour. Where you'll be hearing from my colleagues from both organisations. So we've got Gemma Bourne and Geordie Cox, and we've got a little bit of a change in play just due to some illness. So we've got a couple of people in the background. Mary Alex and Yulita will be joining us for the Q&A rather than the panel session. So there's just a couple of housekeeping points that we'll quickly run through before we begin. So obviously one of the most important things is that I get you off and away by 1:30, so we'll make sure we stick to that timing. The first sort of half of the session or so, we'll be hearing from the team here who'll be talking about the key aspects of the submission guidance and the scope for the RFP, which are now available for you to review and download via the websites on both of our respective websites if you haven't already done so. So I'd encourage you to have a look at that. So we want to leave plenty of times for questions at the end of this session. So I'd encourage you to use the Q&A function, which you can use throughout. So don't feel you need to wait till right at the end. Pop the questions in there. We've got somebody in the background who will be just monitoring those. We will pick them up all at the end just to make sure we get through everything in good time. And then afterwards, we will also do our best to write those up nice and quickly and also get those sort of published and available to all the attendees on this call. You've probably noticed that you're all in listen-only mode, so you won't sort of suddenly appear on screen or anything like that. We are recording this session, and the intention is that we'll make it available so that people can listen back to it if you need to. We'll host it on our websites as well as quickly as we can. So hopefully it's a useful resource for you to go back to as you're submitting your submissions. So I think I speak for both organisations in saying that we are really, really excited to be joining forces to do this. It's the first time that we've done this, to bring up to £195 million of potential investment to allocate to real estate fund managers who are tackling the UK housing crisis. So we're really grateful for all of you joining today and for your interest and for participating in the process. So it's just an advance thank you to everybody who takes part. So I'm now going to bring Gemma and Geordie in. So Geordie, perhaps I can start with you. Can you just share a little bit with the audience about an introduction to yourself, Cardano, as well as your interest, particularly in the UK and social and affordable housing investment opportunity?
Sure thing, Katie. Good morning, everyone, and a big thank you for joining on a half-term Monday. I hope everyone's garden is looking a bit better than mine. It's blown over this morning, so I hope everyone's faring better than me. In terms of introduction, I'm Geordie Cox. I'm an investment manager in the research team at Cardano. I focus my time on private market investments, particularly private equity and our impact investment program. We've met and spent time with lots of you on the call already, but for those we haven't, maybe just a minute on Cardano. We're an investment management and advisory firm. We're focused on pensions and sustainability, operating really across almost every asset class you can think of. So from public passive strategies all the way through to private equity, credit, and real estate. And we do that from a team of about 500 people in the UK and the Netherlands, and we run about 50 billion of AUM today. But in terms of actually today in the topic, why are we interested in social and affordable housing? Just by way of a little background, we've been on a journey at Cardano, as lots of investors have, from an ESG integration point really through to our whole platform now being focused on sustainable investment. But we want to go a step further. And so this RfP is about trying to bring more positive real world change into our clients' investments and their portfolios. And we've chosen to express that really in our private market investment program. And that's a program that's going to focus on allocating to strategies that deliver resilient income alongside measurable positive change in three core areas. So sustainable emerging markets, energy transition, and investments that are going to bring about a fairer society. And so if you take all those together, resilient income, positive impact, driving towards a fairer society, then the investments in this space, when they're done well, make a ton of sense for us. And so the RfP, I think, is designed to do a couple of things: really get us up the curve on the space, understand what's out there, allow us to allocate on behalf of clients to the space, and in so doing, hopefully scale the social housing asset class and ultimately bring impact to communities in the UK. So that's our pick, Katie.
Thanks, Geordie, and Gemma, pass over to you.
Yeah, thank you, and also welcome everyone. I'm Gemma Bourne, Investment Director at Big Society Capital, and I have the privilege of leading the housing team here. Big Society Capital is one of the UK's leading impact investors in the UK, and we've signed 790 million worth of impact investment, all aimed at improving the lives of people in the UK. Those investments have ranged from social venture to providing lending to charities and social enterprises, and also social and affordable housing. Back in 2017, actually, we identified social and affordable housing as an area where impact capital could play a significant role in solving the housing crisis, particularly for people that are most vulnerable and on lower incomes. And since then, we've actually invested up to 160 million of commitments so far in that area. And we're really excited about the RfP because one of our ambitions is to really scale that. And through working with yourselves, we'll be able to do that, especially in partnership with Cardano. So great, really great to have everyone here.
Thanks both. So I guess we'll come on to why this is a joint RfP, which is pretty exciting for us. So Geordie, I'll come back to you perhaps.
Yeah, sure thing, Katie. Yeah, I think a couple of components. Why an RfP and why partnering with yourselves, Big Society. Both are fairly new approaches to us. So managers that are familiar with us will know we don't do this normally. But we wanted to do this to bring some noise and attention to the space. We want to really drive that scale and turn that flywheel in this investment asset class. And there really isn't without being overly sycophantic, there isn't a bigger noise in social impact investment than Big Society. So we're super excited to learn from the amazing team there, to understand and impact investment models. And if we can contribute in a small way, all the better. So that covers those two components. In terms of the RfP itself, Katie, maybe just to talk a little bit on that as well. We published some objectives in the documentation, but maybe just to highlight a couple from our side. The first, I think, is we want to understand what strategies, what impact models are out there. So what do you as managers, what can you offer us? And in so doing, ultimately, we want to invest into the space and then grow the supply of social and affordable housing in the UK. So how are we going to do that? Well, we've mentioned in the publications, we have earmarked capital for it. Together, we're looking to direct as much as 195 million. And really that's to fund strategies that are run by best-in-class managers that deliver additionality and impact, but also critically can deliver strong risk-adjusted returns at scale. And that final piece is really important because ultimately, as Gemma mentioned, we don't want to do this on our own. And so that leads to our second objective, which is we want to encourage other mainstream investors to allocate to this space. So we've seen this asset class scale hugely really in the last 5 years, but you'll all be aware that historically deploying meaningful flow into the space has been pretty hard to do. And it really feels like today we're at a point where it could be a core position in an institutional portfolio. And so that's why this RfP is focused specifically on managers that can deliver risk-adjusted return, but with a clear pathway to scale, and critically an operating model that's going to support that scale. And we need those two things. I talked about that flywheel. We need those two components to generate that flywheel going forward. So that's the second objective, bring others into the space. And then just very briefly, the final one is just linked to that objective. The third is to raise awareness, both amongst the managers, so yourselves, but also investors around the different impact investment models out there, hopefully bringing more capital to the space. And Big Society produced really a fantastic map of the fund strategies in the space last year. I was an avid reader of it. And I think we're going to try and use this RFP to update that map, bring a blueprint to LPs and investors at the space. Hopefully also it will help you bring your name onto the map, but also bring some insight into how you can build your offering to attract mainstream investors. So those are the three I'd pick out, Katie. I don't know if Gemma, you want to add anything there at all?
I think actually the only thing I will add to is just really add on to your points, just a little from our perspective, because you've definitely covered the fundamentals, but it's just a touch on that scale point that you mentioned. So I'm sure everyone on this call also appreciates that to really transform this market, more capital is needed, and a significant amount of capital, far more capital than BSE can provide alone. I'm always pretty staggered by the National Housing Federation research that was done a couple of years ago that said 10 billion of investment is needed each year for the next 10 years to really solve this challenge. So institutional capital can play, therefore, a massive role, which is why it's great to also partner with Cardano in this and the scope and the vision that they have across the market. And in return, this space provides some really interesting and attractive characteristics for that capital. So agree on everything that you've said.
Thanks for giving a good plug to the market mapping, Geordie. Appreciate that.
Yeah, much appreciated.
Also available on the website if anyone's inclined to have a download of last year's one. As I say, that was version 1.0. So we'll look forward to hopefully being able to update that this year. So perhaps you've both sort of covered the high level objectives of the RFP, a bit about your organisations and some of the key things you're looking for. But Gemma, I'll come back to you. If you could go into just a bit more detail, share some of the, I guess, nuances that perhaps don't come out through those documents as to specifically what you're looking for from managers submitting here.
Yeah, absolutely. And I'll take that into sort of 3 sections, I think. And in doing so, kind of refer to you, or allow you to refer to slides 10 and 11, principally in the submission guidance document. But those 3 areas I'm going to talk through are kind of like the top line categories and how we think about social and affordable housing, some specific impact characteristics of what we're looking for. Then I'm going to very quickly touch on like what impact investing is and sort of isn't, which is really important for us when we're sort of allocating capital. So first off, in terms of the 3 categories, we think about social and affordable housing in the market falling into these 3 categories, actually also reflected in the market mapping that Geordie spoke about. But the first is specialist housing, often referred to as specialist supported housing. So supporting individuals that have long-term care needs, for example, to reside in safe and stable homes. So this could be extra care, people with disabilities, for example. The next category we think about is something called transitional supported housing. So that's often focused for people that are in crisis and need additional care and support, but perhaps for a shorter period of time than those in specialist supported housing. A lot of our homelessness funds that we are invested in sit in this space. And then we have the third category, which is often a bit bigger than the previous 2, which is general needs affordable housing. And here we're really looking for those solutions that provide more social and affordable housing than a traditional system or planning system provides for. And the thing that's threaded through all 3 of those categories is actually these should be for people on lower income, so lower income groups or people that are vulnerable. In terms of impact characteristics, it's kind of covered a little bit in slide 11 in the submission docs. But first of all, one of our key strategies or key goals within our strategy is to increase the supply of affordable homes in the UK. So what we're looking for here are the strategies that deliver more than the traditional market will provide. We often see a lot of funds just coming to us delivering straight up Section 106, for example. That's not particularly where we would deploy our capital, because those homes will be delivered through the standard planning system already. We're looking for additionality in what is provided. The other characteristic is really understanding the social needs that the fund strategy is trying to solve for. And that therefore needs to be embedded in the entire investment process, from thesis all the way to selecting partners, to what that means for the user and ultimate beneficiary experience. That affordability is deepened. So we are not going to prescribe an affordability metric to any funds and managers, but what we are expecting to see is that managers have done their homework in understanding what true affordability means for their local communities and in the context of their strategy. And again, that's implied throughout the investment process and the decision making. That where services are involved, these are really high quality, and that we're seeking managers that recognise that their duty of care extends beyond just providing finance. It's not just the what, but also the how. And that means also, again, that user experience is safe, secure, and of high quality. And then finally, quality homes, really important. Just because people are on lower incomes doesn't mean they need to live in poor conditions. So we'd really be expecting to see that quality as a key component of those strategies as well. And I said the third area is sort of like impact investing. What is it? Well, there's lots of resources that the team have outlined in the submission guidance document. So I'm not going to go through those in detail, but just to make sure that we're really clear to you from our perspective that impact investing isn't just about investing in something that just happens to be social and then writing a great report on that at the end of the year. It really comes from really understanding the social issue that the fund is looking to help contribute to solving, that there's a clear theory of change around how that change is going to happen. That theory of change has shaped the design of the fund, the goals of the fund, and then the ongoing decisions that are being made. Because quite honestly, if not, at worst, that makes people's lives far, far worse than they currently are, or at best, it just reinforces sort of the status quo in the market as it exists. I think that's about it in a nutshell.
Thanks, Gemma. That's great. I hope that's given everyone a really good idea of what to focus on. You've probably answered actually quite a lot of the next question I was going to ask around sort of screening and assessing proposals, and I have also seen a couple of questions pop up in the Q&A box around this. I wonder if I can sort of go cheekily a little bit off piste. There's a specific question here around investor presentations. So I guess when you're receiving, there's the DDQ that is on the website that people will be completing, and then we're also asking people to submit a deck. So when those are the sort of two key things that you're going to be assessing managers on. So if you could give people sort of tips about the key things, anything additional that you'll really be sort of screening and assessing those proposals on, and be sort of judging them by. You have already both touched on some of these, but if there's anything that you think is particularly important that you sort of want to highlight that they should be including in there, I think that would be really helpful for people to hear.
Yeah, Geordie, I'll let you go first as I just grandstanded for a couple of minutes.
Okay, Joe, yeah, no, happy to. I think maybe a cheeky response in your to the question, which is maybe not to focus specifically on the presentation, but maybe just to fall back on a couple of the key areas that we'll be looking for, other than the points that Gemma mentioned. And I think this is not out of the ordinary for anyone used to an institutional process, but I'd classify them as three buckets. So the first is best-in-class humans, best-in-class teams, best-in-class processes. So ultimately, I think we're looking for individuals and teams that we can partner with for the long term. You can build a successful team, build an investment process that's repeatable, and critically, really to foster what Gemma was talking about there. That impact operating model requires a certain culture within the business, within the platform, within the team. So those aspects, I'm not sure necessarily come out exactly in the presentation, but those are really important. I think just a couple of points, maybe just to re-emphasize perhaps what we've said in the past, but performance is going to be critical. So I think we need exposure that is going to benchmark attractively against similar types of risk on a risk-adjusted basis. I think certainly from Cardano's perspective, we're looking for cash plus 4% and above, with some yield component there. I think Big Society, you may want to comment on that, Gemma. But in terms of just financial models, breaking down the return drivers, what does your pipeline look like? How credible is your ability to deploy into that opportunity set? All of those are going to be really important. And then just the final thing I would just say is that on that scale point, we are looking for funds that really have a visibility to a first close of 100 million or so, and with a critical mass ultimately of a fund size that's going to be more than 200 million. And that's just reflective of the type of capital that Big Society and ourselves and others are looking to allocate to the space. And so I just flag those, Katie, probably. I don't know if Gemma, you want to add in.
Yeah, and the additional things for me, particularly as the first stage is stage one of like a 3-stage process, would be really articulating and being really clear on what the social thesis is of the fund. What is the fund seeking to solve or help contribute to, which is really, really important from an impact. Any impact fund starts from that position. And then having really clear documented how that is then threaded throughout the investment process. So in the submission guidance doc, there's a really useful framework from the OPIM operating principles, which I'd urge everyone to have a look at. I'd also definitely, if I was you, have a look at the impact management project links that have also been sent out in that documentation, as that will help you think through risks and embedding those in the process. But just also, like Geordie said, we're also really interested in proposals that can attract capital at scale, because that's what's needed to transform this market. So we'll also be looking at people, organisations and culture. So is the platform credible? Is their track record either through experience or AUM that's kind of under management? And then also, what are the fundraising strategies going forward? How, with this platform, with these funds, are you going to bring in this capital to this market?
Super, thank you. So I guess shifting gears slightly, hopefully that has given everyone a really good sort of sense of some of the key things that they should be focusing on. Gemma, could you talk us a little bit through the process and some of the key timelines that people need to be aware of if they're not already?
Yeah, of course. I also realised I disappeared then when I got water. Mental note to self, don't do that in the future when you've got a virtual background. So yes, so the timelines are in the deck, but let's recap them. So by the 2nd of March, if you haven't done so already, if you could let the teams know that you intend to submit, that would be really appreciated. The deadline for the first stage submission, which is the short form DDQ and the investor deck that we've just been talking about, is the 11th of March. We're going to go away and we're going to assess those. And then we will get back to you by the 4th of April if you're being invited to take part in stage 2. Stage 2 will be a longer form DDQ and most likely some in-person meetings, although they will be minimal. Preferably in person versus virtual, but we'll manage that depending on what they are when we get closer to that time. And then the final date for submissions of the second stage is 22nd of April. We'll then assess again. We'll be going to both of our organisations' respective investment committees, looking to the proposals we want to take forward to fuller due diligence, which will be fuller due diligence will be taking place from sort of that mid-spring time over the course of the summer, but ultimately looking to make decisions by late summer into the funds.
Great. Thanks, Gemma. And as I say, everything should be on the documentation, so do have a look at that. And perhaps just the caveat that we all know things can change, so we'll make sure that we notify anybody if any of these timelines differ or anything like that nearer the time, but that is definitely the plan for us all. So I guess finally, quite an important aspect of this process that's worth just highlighting is that the submissions will be reviewed independently So whilst we are running this jointly, there will be high level of independence, and each organisation clearly has their own investment committees and their own internal processes that these need to go through. Hence why I sort of just make a slight nod to timings. But the beauty of this, and hopefully it's appreciated by managers, because we recognise that a lot of time and effort goes into submitting, pulling your team together to do these RFPs. Hopefully there's some benefit in us being able to align these processes, as Gemma's just outlined, allow us to sort of review simultaneously a lot of this, and where possible, we may even be able to do some sort of manager presentations or elements of this jointly, just to help hopefully take some of the time pressure off of you. But to that point, Georgie, I might come back to you and just ask if you could just explain a little bit more about your specific sort of process and anything that people should be really aware of at Cardano.
Yeah, sure. Happy to, Katie. And just to re-emphasize, so we will try and streamline. We're going to be fully independent. So you should in some ways treat us as two separate investors. And the reason I flag is there may be a scenario where Big Society and Cardano take forward different managers at different stages. Now that may not happen, but if it does, we wanted to flag it in advance. But clearly we'll try and streamline as much as possible. In terms of Cardano specific points, I'll just refer again to the documentation. We've tried to set out as much as we can. Maybe just to highlight a few. One is decision making. So at Cardano, we operate two types of decision process. The first is reflective of our discretionary clients, and it effectively looks like an outsourced CIO function. So we take that investment decision on a fully discretionary basis for clients. And then the second is we'll approve an investment, we'll do all the work, but then the advisory client will finally retain that investment decision. And we anticipate both of those investment decision structures to be used in this process, obviously assuming we find some interesting ideas. So that's the first point. I think a couple of others, like many, from a due diligence perspective, we've got an investment process, we have an operational and legal process. Both of those functions are in-house, and both of those functions have their independent right of veto. In terms of where the capital is coming from, we expect that to come from UK pensions and UK endowments. It may come from some Dutch capital, Dutch pensions, but we don't have visibility on that yet, so assume UK exposure. Ticket size will range. So on an individual client basis, you should expect 20 to 50 million pounds. But if all the stars align and the timings work, then we can direct as much as 150 million into a single fund. Now, in reality, we expect that probably is going to be spread out over a couple of funds, but it just depends on opportunities. We've already talked about target return, so exceeding a floor of cash plus 4%. Structure, commingled pooled funds. We're not looking to do SMAs. We're structure agnostic, so we're happy to look at drawdown vehicles. We're happy to look at open-ended vehicles. I think with the slight caveat that clearly there's a liquidity mismatch in the open-ended structure, so we'd be focused on how those mechanics work. I think just final ones would be duration, so we're not looking to be locked up for more than 12 years for clients, so we're looking for relatively shorter duration in this asset class, and not to be overly concentrated of a fund. I think it'll be a challenge for us to be the majority of a fund in terms of concentration. So those are the points I'd flag.
Thanks, Gemma. My tenor down. Thanks, Geordie. Gemma, anything specific to BSC that you want to just draw out?
Yeah, so I will add a couple of things. One, just echo Geordie's comments about streamlining the process as much as possible for you all, but two things mainly from a BSE perspective that are also in the FAQ sections of the deck is one, as we're a wholesale investor, so we need to be intermediated, so we can't invest and wouldn't invest in any organizations directly. The range of structures that we can invest in and have invested in are in that deck. We are pretty flexible, whether it's an open structure or close-ended. On that front, it's not a problem. The other criteria to raise, again covered in the deck, is something we refer to as eligibility criteria. So that is that our money needs to flow to directly or to the benefit of social sector organisations. So really crudely, that is charities, social enterprises, community interest companies, for example. We also appreciate that isn't always possible when you're talking about a big real estate fund for all of that money to flow. So if we would expect a money match multiple on our investment in any of those funds reaching that type of organisation, and that's how we've operated pretty successfully in the past on that basis with some bigger strategies.
Great, thanks, Gemma. So I'm now going to, I think that's the end of our kind of walking through the RFP documents and scope. So I hope that's been helpful to everybody. And as I say, we'll try and make this available so you can watch back if there was anything you've missed. There's lots and lots of information that the team have tried to pull together on those documents to help you. So please also feel free to drop us any questions. As Gemma said, we've got plenty of time to answer those if you have them. Now I want to come and answer some of the questions that have come through on the Q&A, and I'm pleased to say we actually have had few. We were talking before, wondering how many people would ask questions, and we'd need to have some prepared, but we've got plenty to come through, so we'll do that. But I'd ask Mary Alex and Yelita, who are currently off screen, if they wanted to come and join us. We'll target the really difficult questions at both of you. Great. Okay, so I think we'll probably keep it. There is actually one that's just come up in the chat on the right hand side, as well as the Q&A, which we may all be able to see around SMAs. So Geordie, I think you've sort of tackled this and sort of said we won't be looking at SMAs, but there is quite a specific question here around. We would like to put forward a solution that encompasses 3 pooled funds, each targeting a separate subsector under one strategy umbrella. Could you clarify if that's acceptable? I mean, that may be one we want to come to offline, but if there's any immediate responses to that panelists want to pick up.
So I'm assuming it is a pooled structure, but just encompassing different subcomponents of the fund. That would certainly be something we'd look at. I think it obviously just depends on how it's actually structured, Katie and whoever's asked that. But no, I think on the surface we'd certainly look at it.
Yeah,
and nods from Gemma as well. And we can always.
I was going to say the main important thing for us would be that intermediation. So the investment decisions were being made by the fund manager with all the necessary financial and impact controls in place, as opposed to anything where we were having to direct those decisions.
Super, thank you. So now we're going to come to the Q&A box. So I'll start with a nice and easy one, hopefully, to just sort of like get us all warmed up. So how much interest have we already seen in terms of participation for the RfP? So how many managers are we sort of currently speaking to at the moment? Gemma, I don't know if you want to kick off.
Yeah, so, well, first of all, this call today is a really great indicator of that. We've got 70 people online. We had 80 people register, so the remaining 10, no doubt, will pick up the webinar afterwards. We have had really positive indication from 50 plus or so market warming calls and discussions that we had at the end of last year and the beginning of this year. We also know that the RfP process is a pretty successful way of generating interest and streamlining applications to us from yourselves. So we ran one in 2020, which had 19 submissions as well. So we obviously can't confirm that's the number we'd have, but I'll be pretty pleased if we are up at that level.
Yeah, I'm pleased to say we haven't lost anybody either on this call. So yeah, there'll be plenty of competition. Right, so I've got another question to come to both of you, or all of you, in fact, around track record. So both sort of pulled out, it's really important that managers do have a track record. Question around social housing. So if we've got a track record in social housing, but not specifically from a single fund that is in that, perhaps it's commingled within another fund, how would you treat that kind of track record, how would you like managers to present that, I suppose, is part of the question. Is it sort of a carve out of track record? Georgie, I don't know if you want to have a go first.
Yeah, sure. So 100%. Well, I suppose the first thing to say is we probably expect that to a degree, and so 100% fine. How we'd like it presented, I think, as long as it's made clear what vehicle it's coming from, you know, who's made that investment decision, what's the governance around that track record, etc., then that would be helpful. But please do submit anything that you think is applicable, and we can we can sort of pull it together from our perspective as well.
Yeah, and the additional things to add there are, yes, absolutely, pull that out and demonstrate that, and then also in demonstrating that track record in social housing, really set out the who, the what, and the why in relation to that, so we can really get a good sense of the what that social housing was looking to deliver in the first place from an impact perspective. Obviously, in addition, obviously there's the homes for individuals, but if you cast your mind back to what I was talking about, impact, intent, really understanding the social issue and need piece, that's really important there. And also pull out any continuity of like expertise and team members that have worked within that space and that will be applicable to the fund as well. Really important lessons learned from managing those assets.
Thank you. We've got a sort of slightly related question that's come through as well around like percentage of the fund that needs to be social and affordable housing. So if there is a sort of fund that's tackling not just real estate. So yeah, pass out to you who wants to answer that, but how we treat mixed funds. Yeah, do you want me to go first?
Yeah, definitely.
So interesting, we haven't had this crop up before for some of our investments to date, but appreciate there is more funds coming onto the market that are wider than just resi real estate. We'll be looking for something, we don't have a clear threshold, but we are looking for something meaningful. For me, meaningful is minimum is 20% plus for social and affordable housing in that space, and additional social and affordable housing, not Section 106 as well, for example.
Yeah, I'd echo that. I would say I'd encourage you to submit, even if it's, you know, even if it is at 20%, but just manage expectations, just that our bar is going to be relatively high on that point.
And from a geography perspective as well, so how much of the fund needs to be investing in the UK, and how we treat mixed geography funds?
So Gemma, I can dive in, but feel free to from a Cardano perspective, you know, broadly we're agnostic in terms of geographies. Now that said, with this particular allocation, we are looking for a UK bias, and that's really because the pension schemes that we're investing for are clearly looking for some form of place-based impact, and so. You know, a high proportion of UK exposure is going to be encouraged from Cardano's perspective. Gemma, I don't know if you... Yeah,
so Big Society Capital capital is for UK investment. So we'll be really prioritising those strategies that are investing in the UK. We do have ability to tolerate some non-UK, but it's really the exception rather than the rule, and the majority would need to be UK based.
Thank you. So I think we've got one more question that's sort of specific rather about the strategies that are coming through, which I think the panelists can probably see here around eligibility. I guess there's one that's quite specific to Big Society Capital, Gemma, so I might ask you to sort of tackle that first of all. But the question here is sort of, if the money ends up going to a for-profit housing association, does that meet the needs of BSC's requirements?
No, so for us, we appreciate that any of our capital will go into a fund structure. So our direct capital may not reach a specific end entity, but we would be seeking, because of our eligibility criteria, that there is some social sector organisation in the structure, and that match multiple of our money does reach them or enable them to enhance their mission in some way. So if it is a purely for profit structure, then it wouldn't be eligible for our capital, but that could be quite well different. That's quite a unique big society capital eligibility criteria, which is, Geordie, I think obviously very different for Cardano.
Yeah, I think I would classify us as still to some degree learning in this area, and so I think our lens is probably a little bit wider than big societies. So that's all I would say on that point from us.
Thank you. And we make reference to regulation in the RfP scope. So Gemma, I don't have the, we've got quite a specific reference to a point we've made here, but could you just clarify regulated by who? So we've got sort of, we're talking about regulated entities. Does it matter who they're regulated by?
Okay, right, in terms of the underlying counterparties. So we would obviously, we favour organisations that sit within the regulated structure when it comes to RP, so regulated by the regulator for social housing.
Super, thank you. So those look like the sort of main ones around the kind of funds we're sort of looking at. There's a couple of more specific ones here around sort of, so Julia, I might bring this one to you and then back to Gemma, because I think this is quite relevant to some of your clients perhaps, but how important is long-term income? So with the strategies that depend significantly on capital rather than income, meet your requirements, or are you sort of particularly interested in the sort of long-term income play?
Yes, it's a difficult one, right? Because we're trying to have our cake and eat it, in the sense that we want that income cash flow profile, but we're not willing to. Ideally, we don't want to lock up for a super long period of time. So I think I'd answer that to say that you know, some form of capital growth in there as a component is fine, but ultimately we are looking for that income, resilient income cash flow from this particular program within our asset classes. And so I'd say that we're probably not going to be focused on that capital growth, super short duration type of exposure.
And from a big society capital perspective, we are fine across the spectrum from core plus upwards, less so on opportunistic. So categories. So we are fine with both income and appreciation, but one of our key goals is to be, we're not investing alone. We want to co-invest alongside institutional capital that can bring the capital to the market that's needed. So we'll be really looking at proposals and strategies that have been designed for that in mind. And that will be an area where we'll clearly assess as to whether therefore we'll allocate, but generally we're comfortable across all categories, less so opportunistic.
Super, thank you. And this is just a prompt to the audience. If there are any questions coming through, I'm getting to the end of the ones that were submitted earlier. So if you've got any other thoughts whilst we're speaking, please submit them now. Question here actually sort of related to how much interest we've got. So say we've got a huge amount of interest, we're pleased to say, on this webinar. So hopefully we will see that follow through into submissions. But how many managers do we expect to take through to stage 2? And that may be different for both organisations. So I will pass that out to the floor to respond to.
So shall I jump in, Gemma? I think it's an impossible question, I'm afraid, to some degree. So we just don't know what we're going to see. I think ideally it's going to be, between 3 and 5, and just to filter it to a point where we can actually do in-depth follow-ups, but without overwhelming the team. But in terms of the exact number, we don't have that at the moment. We disagree with that.
Yeah, I think I definitely echo that as well. Between 3 and 5, the ideal, but for some flexibility if there's some really great proposals in there to up that, particularly as we think about building our investment pipeline over 2022 and into 2023 as well.
Okay, so we have had another question that has come through, which I hope I asked this correctly for the person who has submitted it. So the question here is, does the fund need to own the assets, or can it invest in asset owners? So this makes sense to me, but I'm not quite sure how to interpret it. Gemma, do you want to answer that as in?
So the fund is almost like a fund of funds in itself. Is this what it's asking?
I don't think that's what it's asking. I think it relates to a specific strategy. So if it's a tricky one to unpick, we can pick up with the person who's asked it.
Maybe we'll pick it up. I feel like I need a real life tangible example to be able to answer.
Okay.
I can place it in some real world context.
Yeah, okay. We'll come back to that one offline then. Apologies for the person who's asked that question.
We will definitely get back to you.
Yeah, we will definitely get back to you. Okay. Yeah, we'll come back to you. Thank you. So that is all for the questions that have come through. So I'm pleased to say we are finished well ahead of time. And also Mary-Alex and Julita, sorry we didn't get to bring you in, but I think it's really great that everyone can see two of the other key members of the teams who are actually going to be reviewing and assessing and have actually been leading a lot of this work forward. So grateful to have you on the call as well as our colleague Nick in the background, who will also be doing a lot of work from the Cardano side on the investment team. So a huge thank you to you. Huge thank you to everyone who's joined. Do get any other questions that weren't answered today sent over to us. We're really, really happy to pick those up offline afterwards and review them. We're of course really excited to see many of these submissions come through. So don't forget the deadline is Friday the 11th of March. I think we'll keep it open till midnight, although we may not be online at that point, I'm pleased to say. And yeah, we'll hopefully speak to many of you soon. But thanks so much for joining.
Thanks everyone.
Thank you so much. Should we drop off and?
I was going to hang on. We've got a couple of people that have stepped away from their screens, I suspect.
Yeah, cool. Maybe Katie, if you're there, are you able to?
I've removed everyone.
Great. It's just us now.
Are we the 5 participants?
Yeah, that's good.